Hey guys, Stock Saturday, and it's been a sort of interesting week. One of my larger reporting weeks had quite a lot of companies reporting this week, certainly on the gold and silver side, and a couple more which I have to come back to maybe next week or the week after. But yeah, it's been a green week, about 2.1% up, which is outperforming, it seems again. S&P up 1.1% for the week, so that's pretty good. Nasdaq 100 is up 1.42%, so slightly better than the S&P. Certainly helped by today. It looks like we've had Trump, it seems, has sort of lost his case in the Supreme Court. They've ruled his tariffs that he originally did on Liberation Day, it looks like, were illegal, and so he's looking to go about it a different way. And it looks like there's a 10% global levy. There's lots and lots of different ways that they can do tariffs. This has sort of been talked about for a while. It doesn't mean the end of tariffs, but yeah, so there's potentially some refunds coming back to some companies. So yeah, stocks doing quite well. But yeah, we've had some interesting moves. Applied Materials, interestingly, going top in my overall portfolio. KGHM sort of dropping down a little bit, and Coeur Mining closely following. So yeah, let's get to the earnings. So Equinox Gold first. Market seemed to be pretty happy with this. Stocks up about 7.5% for the week. Sort of seemed a little bit unsure of itself the day or immediately after earnings, and then sort of the next day certainly, and even today. But it has sort of ended reasonably well up. We already had guidance for 2026 and Q4 2025 production, so it was really just just actual earnings, and you could sort of roughly do those numbers yourself. But yeah, they came out with good you know good Q4 numbers, sort of confirming what they'd gone through before. And then all-in sustaining cost and things, 1,494 cash cost and $1,925 all-in sustaining cost. So that's not exactly great. We'd sort of prefer to see that at 1,500 all-in sustaining costs, what they have been saying for years that they would get to. So yeah, that's a little bit of a unfortunate, and worth highlighting that we are still talking about old gold prices. Average realized price of 3,465. So yeah, most of this quarter has been sort of averaging around 5,000. So the Q1 results should be considerably better. Obviously, this is starting to get priced in. And yeah, adjusted EBITDA 1.34 billion, net income 221. Just come down to their 2025 guidance compared to the actual figures. Sort of reasonably good. Obviously, they'd revised their 2025 guidance to be quite a lot worse during the year, so beating that worst guidance isn't all that hard. But $1,809 all-in sustaining cost for the year, and 856,000 ounces of gold. Fair enough, I suppose. And yeah, coming down to their earnings, so we got 681 million in revenue compared to 584 million just one quarter ago, and 359 this time last year. So that's pretty good. Obviously, this will most likely increase quite dramatically for Q1, as I say. Income from mine operations up significantly, up over 3 times from this time last year. and it looks like they are splitting out the the sold. I think this is the sold Brazil assets. So net income from continuing operations and discontinued operations. Sort of splitting all that out. So we're not going to get this, I wouldn't have thought, for too many more quarters. They're just sort of splitting things out for now. But yeah, looking pretty good. Obviously, all operations is including things that they've sold off, so that will come down at some point. But 197 million, still pretty good. Balance sheet has obviously improved since last quarter, but we know this is going to change quite dramatically since the Brazil sale. So yeah, net debt at 1.147 billion. This will come down dramatically, as I say, and sort of cash should be improving in Q1, but they have lost a quarter of their production. So I've sort of made my thoughts about that quite clear. I thought that was a bad sale, but that's what they've chosen to do. They want to be a North American focused gold miner. So yeah, they see that as the best way to return capital, and yeah, it's done well, reasonably well so far. I just kind of thought bigger profit numbers overall would do the job better than that. So coming over to B2Gold, the market was extremely unhappy about this when it came out, and I would say I agree. These are not good numbers in my opinion. Gold production of 300, so we didn't get barely anything in the way of guidance or anything in their previous numbers. We got gold production of 303,000 ounces, which is pretty good, has to be said. But then we got all-in sustaining cost of $1,754. Not ideal. They are sort of still ramping their new mine. So annual production of 979,000. Which was sort of at the midpoint of their guidance. Yeah, looking at these numbers, it's really, really strong to be fair. Gold revenue at $1 billion for one quarter, net income of 180 million, considering they are still giving away some of their gold basically on their prepay deal. That comes to an end in June, and obviously these are Q4 gold prices, so yeah, things should improve quite a bit from this, and then multiply that up by 4 quarters. It should give you a very, very strong, strong per year amount, and then balance sheet sort of improving a reasonable amount as well. It's the guidance that was pretty poor. So 2026 estimated guidance between 820,000 and 970,000. So obviously ramping the new Goose mine, and everyone was sort of talking about, me included, sort of 1.2 million ounces potentially for 2026, if not sort of almost certainly 2027. And we get this sort of 900,000 at the midpoint, obviously lower than the 2025 production numbers. So that's not exactly great. We wanted higher numbers than 2025, of course, if they've got a new mine on the go. This is basically down to the completion of open pit mining at one of their mines and expected lower production at the Mali site while they're stripping for phase 8. So prep basically to ensure future years are good, offset by the sort of ramp up of their new mine. But yeah, they're basically saying this is somewhat of a prep year, and 2027 should be back to 2025 levels, which so we're not getting to that elusive 1.2 million that I was hoping for. Even 2027 is only getting back to 2025 levels. That's not great. we then obviously, with that as a fairly big bit of bad news, we got all-in sustaining cost, somewhat as a result of this. Still having to run those mines and having lower production means you get a considerably higher all-in sustaining cost. So me thinking, B2, they have their problems, but they're at $1,500 ASIC. We're now looking at $2,500 ASIC, or a all-in sustaining cost. 2,400 to 2,580 is not good at all. They are still talking about royalties, of course. So royalties and production taxes are a percentage of gold price that goes up with, those royalties go up with the gold price. They're saying each $100 per ounce increase in the gold price increases all-in sustaining costs by approximately $12. So yeah, they have to pay more. That obviously doesn't cover, this $1,000 increase in all-in sustaining costs. Part of that is lower production and it being a prep year, but it's still pretty poor, and none of this at all was communicated before now. We've seen investor presentations in January. They would have known about all of this by then, and still putting extremely bullish stuff in their investor presentations. So understandably, people are fairly unhappy. So they are still doing buybacks and dividend and that sort of thing, and people are sort of fairly happy, I suppose, that gold prices are remaining high, and it is still undervalued for what it is, but it's maybe not the gem that we thought it was. But compared to the others, I think probably going to be doing around about as much as Equinox Gold's production, albeit at a slightly higher, reasonably higher cost. But they're nearly half the market cap of Equinox Gold. So yeah, there's good value here, I think. But yeah, the options did not like this at all. And Coeur Mining finally sort of delivering fairly good results, really. Not a lot to be unhappy about here. The stock did go up, or is up 10.8% for the week. So, yeah, people were fairly happy. Just coming down to my favourite spreadsheet of theirs. I love that they include, 4 quarters in full and all of 2024. And all of 2025 just to compare, and Q4 2024. Just think this is a number heavy chart, but I like my numbers. So yeah, gold sales and silver sales both up strongly as expected. 674 million for Q4 revenue, up from 554, up from 480, 360. You can see what increased prices have done. Cost, they do their weird costs applicable to sales rather than sort of, they don't give you their all-in sustaining cost. They have this adjusted cost applicable to sales. But yeah, that has come down in Q4, even though production has increased, I believe. Yeah, 112,000 ounces of gold, 4.7 million ounces of silver, so near enough the same as Q3, but costs have come down, which is pretty good. But I imagine part of that is down to oil, so that does wonders for profits. They have some adjustments. So net income, GAAP net income is down slightly from previous quarter, but we were sort of in double figures for the few quarters before that. So 215 million, and on an adjusted basis, 227 compared to 122 and 140. It's all considerably up, and as I say, Q1 should look a hell of a lot better. So people were pretty happy with that. Again, adjusted EBITDA numbers similar, and Total debt has come down as well, 340 million from 363 last quarter, and cash and cash equivalents is up to 553 million from 266. So balance sheet improving a hell of a lot. They give their consolidated guidance, which is pretty strong. This is not including their very large acquisition, which was nearly all gold. Sort of wasn't 100% happy with that. I quite like them being a sort of relatively silver-focused miner, as much as you can get. There aren't many silver-heavy miners, but yeah, them sort of buying an almost entirely gold miner sort of just brings them right back to being a gold miner with a little bit of silver. But there you go. Yeah, guidance of 390 to 460,000 ounces, pretty strong, and 18 to 21 million. That is still way below what they were saying a long while back, but can live with that. It's still a reasonable amount of silver. And costs, the new Las Chispas mine that they bought is incredibly low cost, to be fair. $850, cash cost basically, and $13.50 on silver side is very, very nice. And the other mines are doing pretty well. Palmarejo in sort of $800, even cheaper than Las Chispas. But the silver side's a bit more. But all their mines are looking pretty good on costs. All-in sustaining costs would be a bit higher than this, of course. And yeah, exploration and G&A costs all looking pretty good. Yeah, basically, overall, a nice report, and sort of no real surprises. They're just giving you the leverage return of gold and silver, which some of the others don't appear to be. Although, I am in the sort of mid-tier producer market, which can be a bit volatile. So, yeah, an interesting week, and seem to have come out of it fairly unscathed, considering we've had some sort of not the best results across the board. So, economic news, we had quite a bit this week. Some job numbers for the UK looking quite bad, really. 5.2% unemployment rate, not exactly great. Average earnings down quite a bit, including the bonuses. So, whether it's bonuses getting knocked, that's a possibility. Unemployment claims, the sort of non-farm payrolls number for the UK, 28,000 people, up from, last month's was revised down from 17 to 2,000, so it's a little bit all over the place, but yeah, unemployment still going up. Wednesday, we got UK CPI as well. Is quite a bit down, to be fair. 3% on headline year on year, down from 3.4. Obviously, they want it closer to 2, so it's still, fair way away. Core CPI at 3.1% as well. Was expected to be 3, so shouldn't really be green. It's green just because it's a higher number, I guess. They don't see it as inflation, but it's down from 3.2%, so yeah, not horrendous. GDP now down to 3.6%. I think there was another figure of that as well. Jobless numbers in the US, sort of much of a muchness, haven't really moved. Yeah, GDP now down to 3%, so this was 5.4% at one point for Q4. Obviously, we're in Q1, over halfway through Q1 now, so it would be nice to start seeing some numbers for Q1. Friday, we got retail sales for the UK coming out very, very strongly. Obviously, some of this is inflation. If we've had 3% inflation, then 5.5% is strong, but it's a couple of percent above inflation. And retail sales, non-core retail sales at 4.5%. So yeah, not too bad. And public sector net borrowing. So it looks like they've had quite a lot of tax income. Capital gains tax was better, and some of the other taxes were better. So they have had a £30 billion surplus for the month. So we're not having to print endless amounts of money every month, although they are still printing a fair amount. And some of the PMI numbers looking pretty strong, pretty much everything above 50. And I'm keeping an eye out for manufacturing numbers. So EU 50.8, pretty good, and the UK 52. So we're all above 50. It's a manufacturing expansion. We've got some inflation numbers, the PCE sort of Fed's preferred number, but it is December, so that's probably a little bit out of date. And yeah, S&P, I think this is all S&P PMIs as well, a little bit more US focused for February, a little bit worse than expected, but still above 50, so it's expansion. Yeah, portfolio's a little bit all over the place. We've had some reasonable gains. Pan American Silver, not seen whether I'll have to check whether they reported results as well. I sort of forget about them in the smaller ISA. 12.8% for the week. That is my biggest performer. And yeah, some other gains here. Amazon up 6.8%, sort of recovering a little bit well. Actually, just realised there's a couple I have to manually update. So yeah, Samsung is actually up 9.16% for the week. So very, very strong. Just continuing. It's now hit 100%, I notice. So very, very nice for them. And yeah, some other gains. Equinox, as I say, did well. Some other sort of small single figures. Adecco Agro actually doing quite well. Hive Digital actually isn't up 31%. That was just because I added some in the ISA. Just thought they were at a reasonable price and still have a bit of potential. I had some cash in the Interactive Brokers ISA, so I bought a little bit more. Deere reported results, and they have rocketed up this week on what I thought was not the best results, really. Profits are sort of 50%, almost 50% down, I think, from 2023's all-time high, and the stock's up 50% since then. So, everyone's excited about pretty much all sectors being, up double digits, but if you're down 50% on profit, then you need to be up double digits, I sort of think. So, yeah, I think people are pricing in a hell of a future, but just getting back to all-time high profits would still give them a 20 times PE, and that is potentially onwards from 2027 or 2028 maybe. So 20 times 2028's earnings, I think was a little bit too strong, and I was never 100% wedded to them. They're sort of 10% net margin business, have a reasonably strong moat, but yeah, I always sort of thought I was happy to let them run, and they've run 46% in basically no time at all. So we're having a look at Caterpillar as well. They've sort of done similar numbers, about 45%. Still a little bit more happy about them than I am Deere, so I've held on for now. But yeah, starting to sell off some of these stocks, Meta and Deere, and sort of not really starting any new positions, which is probably for the best. I really need to be adding more to some of these ETFs, which haven't done a huge amount. They're all green for the week, which is what I want, really. Sort of a little bit more stability in the portfolio, not having options positions and things swinging wildly around. I've got my Nakamoto almost down to zero, £1.24 now. So yeah, that is near enough zero. Hive is down quite a bit for the week, stock down, so the options have taken another hit. I did buy 50 contracts, almost sort of just because I had a limit order on and it filled. It wasn't me sort of thinking I'll buy a little bit more. Actually, it was just it did hit my limit order. I sold off quite a bit of. I sold off all of my B2Gold 2027 options because they have less than a year to run, and I sort of wasn't convinced B2 could do a huge amount this year, basically, with this sort of poor guidance. Sold them at an awful time, really, while the stock was down on the earnings, and it sort of pretty much recovered. So, yeah, that was quite poorly timed, but that's me all over. Keeping the 2028 options, and Equinox has had a strong week, obviously with the stock doing well. So yeah, overall, maybe not the best decisions by me over the last sort of couple of weeks, especially buying a huge amount of B2Gold before earnings. Could have maybe waited until the earnings and bought some on the dip, but who knows? Long term, it generally seems to work out quite well. So yeah, leave your thoughts in comments below, and like and subscribe. See you soon.